discuss the week that was. Kevin Green, our senior markets correspondent, is back with us, and Alex Coffey is joining us here in studio, our senior equities contributor and the host of Next Gen Investing. So, Alex, first let's just start with you. Overall thoughts on this week's action on the whole.
Yeah, so a couple things really stuck out to me. I think all in all, there was actually a lot of fairly good news throughout the week. And what I mean by that is you look at something like the economic surprise, Citi puts a good one out. It's as most positive as it's been at any point in 2025. And so that sticks out for a key reason, which is that means data is, as relative to expectations, is coming in better than at any other point throughout this year. And so then you look at a day like today and you say, well, then why are we down? And I think it highlights the biggest risk that faces this market. And that is you have a very concentrated trade. And that story, which was also highlighted by some earnings that you had in the last 24 hours in Nvidia, Dell, Marvell in particular, that story is a decelerating one. So it's still there, it still exists, but it's very concentrated and the story is starting to slow down. So if that money starts to rotate out and find a new home, well, you get a day like today.
And I want to follow up on that too, and bring Nvidia in. We waited, Nvidia felt like it was going to be so far down the tail end of the earnings season. We got them. Also a big part of this AI trade, and the response was tepid, but not as positive as expected.
Yeah, definitely not as positive as expected before earnings because the optimism was so high. But I almost think you could argue, too, given the fact that they actually missed on their most important segment, it could have been a lot worse. So there's still a lot of demand below the market to own the shares in the industry leader for semiconductor equipment now, but also the AI trade as a whole. All that to be said, I think they highlighted that risk, which is, look, the picture is not as rosy as it just was, 6 months ago, a year ago. And that means, hey, you're spending a lot of money for these shares now. Maybe money's better spent elsewhere.
Yeah, and Kevin, coming to you now with that same question on your takeaways on the week, what stands out to you most?
I would agree with Alex. Obviously, the earnings announcement that we led up with that, and obviously everybody was looking for something that was spectacular to really move the markets, and unfortunately, it kind of fizzled out. And that's just because of high expectations. We're going to do it again in 3 more months, Marley. So at the end of the day, Nvidia is going to be Nvidia. The economic data was actually pretty strong relative to the street's expectations. We did not see that many weak prints on a relative basis, and I think that was actually something that was a positive for the week so far. I think next week, though, it becomes a little bit more of a headwind. You have ISM manufacturing data that kick us off on Tuesday. That has been a bearish print for us, especially when you're looking at the prices paid component. And then we have jobs data, ADP report going to be on Thursday this week. Do we focus on that more because of maybe some of that drama that we saw last month with the BLS data? And then we also have the jobs report on Friday. So I think it's a little bit more of a tougher battle next week for equity traders if you're looking for that bull narrative rather than maybe a mixed narrative that might be shown and reflected with the economic data that we're going to get.
And Alex, to you, thoughts on the data that we are getting next week, because it is a pretty decent week in terms of data, especially ahead of that Fed meeting coming up. What do you think has the biggest potential to move?
Yeah, I think the nice thing about next week, I think there's actually several options for that answer, to be honest with you. I think ISM services, I think ISM manufacturing, I think JOLTS all could move the market. Obviously, the right answer is going to be non-farm payrolls and the jobs data, but the problem with that is it's on Friday. The good news is, for those who like volatility-inducing events or things that can create the potential for it, is you get something basically every day next week. So that's a little bit different than several of the weeks we've had, this week in particular, but also last week, where it felt like everything was shoved into like 1 or 2 days at the back half of the week. At least next week, it's going to be relatively evenly spread out. You do have a few earnings names, but not a ton. I think Salesforce is on the list. So earnings aren't really going to be taking center stage now that we're through Nvidia now. There's a few names, not the biggest ones, although I think Broadcom might be on that list too, which certainly can have an impact. But all in all, I'd love Kevin's thoughts on this, but the data's coming in better. But does that mean it's safer now to dip your toes into something else? Does that mean that the rotation into things like the Russell 2000 continues? Does that mean that interest rates stay a little bit more elevated? And what does that mean for the market? Because if everything's in Nvidia and Microsoft and Alphabet and these names, and now you feel more comfortable going elsewhere, well, not every single dollar is going to rotate back into the S&P 500. It could be net negative for the market as a whole.
And Kevin, what are your thoughts on what Alex just said?
Yeah, I mean, I would agree. I mean, once again, it's going to be more of an uphill battle, and you're still going to need to have that Mag 7 components really try to outperform to keep us up. There's actually two charts I want to highlight here to give you a little bit more context as to why. I think actually the first one, the Nvidia chart, is actually interesting. Marley, if I told you that Nvidia only moved 2 cents for the whole month, would you kind of believe me? And I think that's actually going to be a really big question there as to is that going to actually be the case? And if you look at the monthly chart for Nvidia, we do have a little bit of a gravestone doji that actually is taking place here, where we actually do see pretty much a thin body wick within the stock. I'm not sure if that's Nvidia or not. I can't really tell. Okay, I can see it now. You have a long wick to the top. You actually have a very small body, and then you have a lower wick to the close at the lower end here. That's really kind of a reversal pattern. So it just means that there was a lot of indecision for the overall month. Monthly charts carry more weight than daily charts. It carries more weight than weekly charts. And so this is the one I'm keeping my eye out on moving forward. And then the other chart here is the E-mini S&P 500 futures contract. There's actually a trend line that has been in place for the last 10 years, 9 years and some odd months, if you will, where the highs of that this channel line to the upside of this trend line has been a key area of resistance where we do reject. Now, as time goes on, obviously that trend line gets higher and higher, but we're pretty much approaching that trend line at this point in time. And if you kind of move over to the next month, you could make the case that around the 6,666-ish area for the E-mini S&P futures could be a really key area of resistance. And then the RSI is potentially still in that divergence or still trying to work itself out. So I think there's some charts to really be focusing on. I think it's going to be an uphill battle for next week. And if Nvidia doesn't really turn on the jets, it's going to be very hard for the market to rotate out of this in order to continue to move to the upside here for the S&P.
And so with all that said, Alex, knowing that we're coming into seasonally a weak month, a weak time period in terms of equities, what's your expectation for the month on the whole?
Well, I think it just got a little bit worse. I mean, Kevin just said gravestone doji. That's certainly ominous. And then he just dropped 4 6s as a level to worry about. So for those with superstition in their minds, maybe that's not the best of numbers. But I think seasonally it's more sideways to lower September, October. It's really September gets all the attention, but October is not a ton better. It usually though comes out of a strong summer though. So some of that is like, hey, maybe you just are getting people, a little bit more engaged. The summer vacation time is over, and you're reassessing. There is seasonal low points oftentimes for risk assets towards the end of quarters in these expirations in September, June, as well as in March. And so you have that approaching. All in all, though, to me, still the most worrisome thing is that there really wasn't a huge catalyst today, and you're starting to see that rotation out of AI. You didn't see the big month-end buying that we've seen in so many of these months. So you might be getting to the point where demand for the AI stocks has actually finally had supply catch up to it, and they can go maybe sideways or lower for a little bit, which probably is due, but it can be scary when it happens.
Well, I appreciate you both taking the time ahead of your holiday weekend. Alex Coffey, co-host of Next Gen Investing, and Kevin Green,